Welcome to another video by Steve Hill, CEO of AIQ Systems. Subscribe to our channel at the end of this video and let's start your journey to trading success.
So here we go. Right now we have on Autodesk here, we had a sort of interim high getting back up. These are the most recent highs over here. Price action has moved all the way up to this high here. I mean, we're really almost all the way back up to here. And it's at this point here, we start to see the divergence when we get to the beginning of July. We change the date to there. So we're already seeing, prices have made a new recent high, but already the MACD, I mean, it's been diverging a fair amount. It was almost in sync in here, but it's definitely diverged, as you can see from this price peak here. This is a lower peak here, whereas this is still higher. So the divergence is already in place. Great, that's the first part we're looking for. Second part is, where's our RSI? Well, it's kind of flat, right? I mean, this is more, less obvious than it was on the Adobe one, but still, it's diverged somewhat, but not as much clarity as we saw on this one here, for example. And of course, we're close to current day's price action. Interestingly, well, because this is updated through 7.9, right? Last night, when I did the session yesterday, I'd had data through 7.8. So this actually has panned out pretty well. We were up here. You probably would have said, well, this is not a bad divergence. It's reached this resistance up here anyway. We've got plenty of room to the downside. Maybe I would have got in here in the morning on Autodesk and followed it down. The volume itself, the volume again has been, as this thing sort of swung up and it's almost like it's thinking about doing a cup and handle, the volume itself, the average has been sort of flat, but sort of fading away. We know last week, of course, was only a 4-day trading week, so it's to bear that in mind. But yeah, it's not looking too bad. It would have been a pretty good play. So Autodesk, that one's really got great clarity. This one had less clarity because we didn't have the RSI Wilder diverging, but it was in overbought territory briefly here, and then it popped back through there. So you might have got in earlier on this one, or certainly thought about exiting out of the position if you were already in it and have ridden this all the way up from down here. So that was Autodesk. Let's have a look at another one. Amgen, again, well, this is not really, it's an older company, again, been around a while. This is, a more substantial sort of V-set shape, the classic sort of short-term double top here, not a really big one. Let me get both of the indicators up here. Interestingly, with situations like this, the MACD definitely did start diverging back here. I'll just change the date back to that. You can clearly see the divergence is beginning right here. I mean, it's definitely in place. Again, with, the RSI Wilder here, there's no overbought area, even though it's somewhat flat. It's, it's the same as the price pattern. So that's not really a divergence, right? And there's enough room to the downside here. But this one I wanted to illustrate where, if you've got more choices than just one stock to go look at, then you might want to say, okay, this one's probably not one that be worth looking at. And as it is, things have been sort of just moving along sideways again, doing the consolidation thing like we saw in Adobe. So it's worth keeping an eye on, but not so much clarity here. It never got into overbought territory on the RSI Wilder. So we'll skip on past that one. The next one, yes, Gilead Sciences, more of a technology company. This one was quite, more of a flattened top, reached a recent high here. And it's kind of, again, you get this sort of consolidation happening. It's like playing around with this high for several days, right? We know that this area here is kind of the same level. I mean, it's pretty close to it. And that this is a resistance level as well. So it might be just struggling to get out of that area. So what do our indicators show us? When we go back and change the date to the beginning of this pattern here, even back here is good. You can already see, there's the high here. It's come back to the same sort of high level. In this case, the MACD is definitely sloping away much lower on the highs. And the RSI Wilder is also doing the same thing, although we've never got over into overbought territory. So again, it gets this little consolidation period going on. And here we are at 7.9. It's kind of bounced back into this high area here. There's still a divergence in place, but the RSI Wilder is still kind of diverging. The volume is the key thing. Are we seeing an increase in volume? If the volume is fading, and it is, look how that's faded. So this is a possibility as a candidate because the volume, they're giving up here. I mean, this is consolidated a little bit. It's back to that high. There's no, there's no real commitment from traders at that point. So That might be a better candidate than the one we saw before on Autodesk. Intuit, this one popped up too. So remember, I was just looking at technology stocks, and Intuit's not really technology. I mean, it's another older one, but it's more of a, as we know, Intuit software. Anybody's into it does any accounting and QuickBooks and Quicken will know, and all their other services or software as a service that they offer. This is a stock that's been around a while and it's got some decent volatility here and there. Right here, this is like a consolidation pattern that's happening right here. It's popped out to a massive new high. Obviously, there was some earnings or something happened at this point here. You get MACD and RSI Wilder. So this breakout movement here is why we've suddenly got this big old pop up in the MACD right at this new high here. Here we are back over at 7.9, right? This is a pretty decent trading range. The MACD is very, very strongly negative. Notice over here the RSI Wilder did pop into overbought territory. And even when it did pop down, I mean, nothing happened in the price action. So we know it's not always going to give us the information to support a confirmation of a down move. But the divergence is definitely in place and it's continuing. I mean, it really is between this price action and this. I mean, it's getting, it's kind of stuck in this range. I would say, something like this is a good confirmation. There's plenty of room to fill the gap, for example. That might be the first thing that would happen on the downside. And you've still got plenty of room all the way down to that recent low back in April, down on the 537 level. The volume has begun, for a period of time, it's been fading away during this. So this is more consolidation. Use your trend line, wait for a breakout below the trend line. That would probably be the best time to go short on something like this. I mean, if you'd already, if you were holding this and it's moved up here, you probably got out round about up here. Anything that gaps up, I never like. I just always think it's going to fill the gap at some time. Not always, but like what happened here. Look at this one, gapped up and it filled it back in. Always worried about a gap up and it eventually fills it back in. So it might be a good shorting opportunity. Next one for us, KLA 10 core. I just like the look of the stock because of the indicators here. We've got the divergence in place. This is more of a classic. Again, we've had a recent high and it's kind of broken through the high there and it's sort of thinking about it, but look at this pattern. It's getting tighter and tighter, right? And that point, we've got a modest divergence in place. It was in overbought territory here, broke through. That's a very short trade. You could have got in there, but you have to be pretty nimble for that one. It looks like it went back up into that territory there, just about on the 70 line, yeah, close to it. But really, the divergence isn't that apparent on this compared to some of the others we looked at, but it's worth keeping an eye on. If the volume, again, the volume here has completely been fading through this whole period. It really has. I mean, despite it being July the 4th week back here, it was fading before that. I mean, the average volume is our key to this. If it breaks out to the downside, yeah, you've got a bit of room here to play a short on that. Might break out to the upside, but if it does, then that's not what we're looking for, given the divergence between these two indicators. Let's see, what else? How far are we down the list? Oh yeah, we've got a few more to go here. This is great. And let's move on to the next stock in the list. Meta platforms. Well, yeah, we all know Meta, so again, not technology. When I say technology, AI, or social media platforms, anything that does that's not newsworthy, but it's definitely a player in these days in the market. This is a great pattern here. Look for this longer term. Look at the resistance that's come into play up here when Meta reached this peak back at the end of June, and it pulled back a little bit from there. So you're now kind of in this sort of this range coming up here, right? And then it never really quite made it back up. It almost made it back up to the new high here. Now the divergence really was in place here. It wasn't a very strong one. I mean, it's definitely in place. You can see it there. And again, with the MACD and the RSI Wilder, there's a modest divergence here. You could, it would be very hard to play these modest divergences. It moved back. So this happened, this was back here. Let's change the date back to here. And sometimes you have to consider the range on the screen of your stock as well, because it compresses the indicators. So if I do the indicators just one at a time, is it any more obvious? Yeah, it's a modest divergence, right? And when this moved up to the next high level, and the same with the RSI Wilder, it's a modest divergence. It popped back up almost to the overbought there. Would you have gone short there? Maybe. The volume would be key on that. Not really great because the volume itself is actually slowly looks like it's leveling out and increasing. So that might be one to skip. Again, it looks like it's in a bit of a range here, but I don't think it was the divergence was very modest. Yeah, we're at a resistance level. You could play a bounce off of here, I guess. But again, actually the volume now has started to fade again. So it might be worth keeping an eye on. The MACD is still in play, it's still diverging, and the RSI wider modestly, it's kind of in the same position here. So it's less apparent on that particular stock. Go back in time though, back into April here, nice little double bottom in place on Meta. When we look at the RSI wider, it drops into the oversold territory here, classic back through. Comes back down, never quite gets back into oversold, but we do have the divergence, which is kind of nice. And then we look at the MACD in here. Not so much on that, pretty much saying the same thing. So despite that, prices did move off from there. Volume was probably the key thing here. The first bottom here was massive volume. The second bottom here was much lower. So that's a sign really that the shakeout was over. So you could have got in somewhere in this area here for a ride up. Very volatile, of course, the gaps are quite frequent in stocks that are in the news a lot. Netflix, so not tech, but it's in the news all the time. Netflix itself, there's a couple of examples here. Let me pop the MACD and RSI wider on this one. So this one, lower low here on the price action. The indicator, the MACD, is pretty flat, so it's a modest divergence. Same here on the RSI wider. So when you change the date back to there to see what that looked like, yeah, I mean, it's not, And I illustrate this to say, would you have traded that? Probably find better candidates, even though the stock moved up from there. The volume would have been key. Here's this bottom here. The volume was pretty better than average. This bottom here, the volume is still better than average. So there's not a huge clue that was going to be the bottoming moment for Netflix. So less clarity on this particular stock on that particular bottoming area. So you might not have played that, despite the fact that this thing took off. It's not, none of the stuff we do here is a perfect science, that's for sure. More recently, I marked up here as prices got higher, new high, new high. The MACD started to give up the ghost here, and the RSI wider did similar thing here. And you've got a sort of a small move to the downside, but we are still, again, not seeing the sort of commitment or the fallout that we want to see on the price chart itself. I mean, it's not a great looking divergence. This just continued on. This is actually getting better as we get longer in time. As time goes by, this divergence is looking much better now. Although on the RSI wider, it seems to have fallen out of its pattern completely. This area here. So look at this, just to show you that it doesn't always fall in sync like this. RSI wider, here's the divergence. Get rid of the yellow. Divergence on the MACD, not huge, but price action's gone from here to here. So that's a better looking setup right there, except the RSI wider is not showing as much. So not huge clarity on that one. It does seem to be better when we get a clearer divergence pattern in place. This one isn't quite so clear with the price action doing this, although it is definitely diverging. Network appliances, another one of the old crowd. Here's a pretty good sort of consolidation area here. Price action came down here. You do see this type of sort of a curve, a sort of upside down sloping cup and handle, I call it. Here's the cup and there's the handle. And you see that happen, and then you get this blowout down the bottom here. We have a divergence in place already. The RSI is not that great again, but still, it's pretty, you've got a pretty good divergence going there. Is there a blowout volume at the bottom there? Yeah, it kind of is, not huge again. So you do have, of course, room to the upside, at least to this area here. And that's how far, really, this stock moved. Network appliances really got back to where this gap was. Would it fill the gap? Who knows? But again, the pattern size, this would have lasted from here to here. So I put this back in. You're looking at, mostly the pattern is really from this period to this period. So maybe into here is as far as you might have said, well, I'm pretty much out of the pattern. It's shaken itself out now. So interesting again, the crossover from the overbought territory here would have been a great signal, really. Not only had sort of it was diverging simply because it's flat, whereas this is going down. This is diverging, obviously. And the crossover from overbought might be the signal day would have been right about there. Yeah, so you maybe have waited until it crossed over there. And at that point, you've had a breakout, volume increased, that might have been the time to get in on the next morning, which would have been there. And then prices moved sort of up slowly but surely, pretty much from the sort of 79 area where we are there on May the 5th up to, you could have said that was your break at the end of the move to 105. So that's a pretty good move, 25, 30% move to the upside on network appliances. Right now, I was looking at this earlier, it's just, it's stuck in here, right? I mean, it's definitely stuck in here. MACD is falling away slowly, and look at this. So I think that looks dangerous to me, like that's consolidating and going to be over at some point. Volume, I bet, it's dying, right? I mean, yeah, we know 4th of July was last week, but that's just dying off. Summer's difficult sometimes, but yeah, nothing happening here. This thing may break down. Look for it to break out. Again, we've got some trend lines we can draw on here. We're stuck in this area here. This could be an opportunity once it breaks through that line. Right, let's see what have we got left in here. I know we've got a couple more stocks before we wrap it up. Yeah, STX, let's have a look at that one. Get those indicators back on here. So this is interesting. I mean, this thing's been moving up. Seagate, another old technology stock. I mean, it's amazing how some of these companies are still around. I mean, obviously Seagate has migrated from the old drives that I've got still floating around somewhere in a cupboard, right? The old Seagate hard drives. I moved into far more both cloud services and more volatile data storage environments that you get on phones and all sorts of other devices. So there's still a player in the game. There's no doubt about it. This is a pretty good move from the upside from early April up until where we are today. This divergence here was the one we were focusing on, and changed the date to that. You reached a brand new high here. So we've got no resistance to the upside, but it's at a brand new high. MACD is just slightly sloping down, so that's a sign we look for. But the RSI, and here's the thing, this one's not confirming really. It's just moved up a little bit higher, so there's non-confirmation there. However, we've been in this, this overbought territory. We know that if we get a solid breakthrough through here, and there's still this divergence in place, this might be a candidate going forward. So here we are, and this is where it happens, right? It broke through right here. So this is a few days after this original divergence was in place. Would you have played this earlier? I don't think so. I mean, there's no trigger here. This is not confirming with a divergence on RSI. So you would probably have skipped this stock and moved on to another one. Possibly looking at volume here. Yeah, when I saw that volume here and this reached a new high, I mean, you're kind of in a situation where it could pull back, but I don't know. As it happens, it did. I mean, where's it going to go from here? Well, we're going to get ourselves into this trading range here. This is still trading to the upside, right? I mean, it's in a range. If it breaks down below this level, it could be a good candidate, but the volume is still pretty good. There's a bit of volume there as it's moving down, so there could be something happening there. Right, one more stock for you today. I had to have Tesla because, everybody talks about Tesla. Buy Tesla. Can't even try, and sometimes the options are really overpriced, but that's changed a bit recently. It's not quite so high on the premium. I love options, by the way. It's just I don't want to buy or own a stock. I just want to be able to leverage it. So there's a bottom here in early March on Tesla, around about there. The worst stage there at 213, almost came back down and tested it again. And what we have here is there was the beginning of a divergence here, but it's just too short a term. And this is one of the things, at minimum of 10 days seems to be enough for it to start to make sense as a divergence. I mean, you look at shorter time, it's too, it's got no pattern you can see. Here, by the time we get to early April and we're back down to this low level again, there is clearly a divergence in place on the MACD. And there's also a divergence in place on the RSI Wilder. So both of those situations were in place. The volume itself, and we're at this date here, change the date here so we can see what we were looking at on this day. So volume, I mean, massive volume here. The volume at this bottom, and then this one was much less. This volume again was huge volume, huge amount of volume here. I mean, there's a lot of sign that the volatility on this stock was in bad straits. There's no real clarity that this was the sellers were already sort of disappearing. And then you have this massive gap, this one, a gap update. You could have with the divergence here. I mean, look at this. This divergence was in place. And there is a divergence on the RSI Wilder here. Remember, this is a massively volatile stock. So in theory, you could have got in at the open here, divergence, divergence. You got in at the open here on the 9th of April, right? Around about 224, and it closed at 272. I mean, would you have stayed in all day on that? I don't know. But either way, I mean, you can see the divergence was in place. The volume was just massive, and it's either a blowout. It looked like a blowout volume right there. I mean, after that, if you'd stayed in, you'd have been, not feeling very happy about it until you got to here. But by then, the pattern was pretty close to playing out. This pattern ran from this period to here, so you could run it all the way through, maybe a little bit further, maybe out to there. But yeah, again, it's a tough stock to play sometimes, but you can see the divergences are in place and they do make a difference. They certainly do make a difference. Great, that's pretty much it. So recap really is the divergence is the new thing for me on the RSI Wilder. I guess I've known about it, but I've just not really looked at it in context with other divergences. Using both of these together seems to be a good way of doing things. Volume is key. Make sure there's the blowout and volume is even better when you get a double, triple bottom, or it's the second bottom's low and the volume blows it out. The level of your support and resistance is important as well. So with this, like on Tesla here, this is a resistance level, and you can see it. It made its way there and then just stopped. And again, in the context here, we're trading within maybe a couple of weeks maximum time frame. If you're an options trader, that would be you wouldn't want to be longer than that, really, or even less than that. Any questions? Pop them into the chat area here. We'll be doing another session next month. We've got plenty of other things we've been looking at. Some great suggestions on indicators that we don't have in the system at the moment that we are programming into Expert Design Studio. So I think we'll cover a couple of those next time I'm in this meeting. So any questions, pop them in there. If not, you want to know, if you're not a user or a client of AIQ, go to AIQsystems.com. There's some information there on getting a copy of the program and trying it out for a month. So again, we're always working on new areas. A lot of the things we're trying to focus on now are on indicators, something new to put in the system itself. And we'll keep you posted on that. Yeah, thanks, Roger. Yeah, I didn't know about, when I say no, I didn't know about the divergence, but I never thought about it because your mind is drawn to the RSI Wilder as an overbought, oversold, and we can clearly see it does have some relevancy in that area. Although it has with highly, I would say parabolic stocks, it has a tendency to stick up here in the overbought territory, dipping down occasionally, all the way up on a big move. So none of these indicators are flawless, as we know. But the more we do together and the more indicators, the more confirmation, the better trading opportunities we'll get. Well, great. Thanks for being here tonight, and I'll talk to you all soon. Have a great evening.